So good to have you join us today. You've tuned into Business Daily, and I'm Lee Ji-yoon in Seoul. We have a lot on our plate this afternoon, so let's get started with the day's highlights. Fresh numbers show that older Koreans in their 60s and above have double the weight to shoulder when it comes to household debt. We find out why. It's a mixed bag for Korea's top listed companies as their third quarter earnings are coming out. Some did better than expected, while others suffered major losses. How are things looking for the fourth quarter? We'll sit down with an expert. Despite hopeful news that Korea's per capita GDP will get very close to Japan's in 5 years, many experts are calling on the country to reform its industrial structure to stay competitive. Our Park Se-young tells us more.
In 5 years, Korea's GDP per capita will rise to nearly $37,000, drawing close to that of Japan's. According to the IMF's World Economic Outlook database, the nation's per capita GDP will reach $36,750 in 2020, a 31% rise from last year's $27,970. Japan's per capita GDP is forecast to see a 6% rise over the same period to slightly over $38,000. In 2005, the GDP per capita of Japan was nearly 2 times that of Korea's. Last year, Korea's per capita GDP adjusted to purchasing power parity came in at $35,400, close to Japan's $37,500. In 2018, Korea's numbers are forecast to overtake Japan. The latest figures show Korea is narrowing the economic gap with Japan. Last year, Japan's GDP was $4.6 trillion, 3 times bigger than Korea's. According to the IMF's database, Korea's 2014 GDP of $1.4 trillion will rise to $1.9 trillion in 2020, reducing the gap to 2.4 times. In this year's IMD World Competitiveness Ranking, Korea climbed 1 notch to 25th, while Japan tumbled 6 spots to 27th. Meanwhile, the economic gap between China and Korea is expected to widen from just over 7 times last year to 9 times in 2020. Experts say Korea will have to stay competitive by reforming its industrial structure and developing highly profitable products to ensure it keeps pace with the Japanese and Chinese economies over the next 5 years. Park Se-young, Business Daily.
And with Korea's domestic consumption picking up in the recent months, the need for a rebound on the exporting front has become all the more important. But it looks like shoring up leading export industries won't be that easy. Our Shin Se-min reports.
Despite Korea's outbound shipments posting a decline of 10 straight months in October, falling nearly 16% on year, the country's chip makers put up a good fight. Samsung Electronics, the country's top producer, is expected to rake in $11 billion in operating profit this year, while number 2, SK Hynix, earned in $880 million just in the third quarter. But industry watchers are worried that looming ahead is a downward spiral for global demand. Already, outbound shipments for chips in October fell 7% on year, down $5.5 billion.
The unit cost has more than halved as manufacturers increase their production for DRAM chips. On top of that, a slump in PC markets has dampened demand.
New smartphones rolling out aren't expected to prop up sagging demand either. Both Samsung and LG Electronics have been logging lower sales after each reaching their pinnacles in 2013 and 2014. And Korean automakers aren't doing much better. In the first 9 months of this year, Hyundai Motor and its affiliate Kia Motors saw their overseas sales drop nearly 3.5% compared to the same period last year. Now this as Korean automakers are increasingly being squeezed out of the US and the Chinese market as their price competitiveness erodes away. Underperforming Eurozone economies, weaker local currencies in emerging markets, as well as cheaper oil and material prices are just a few other factors driving down automobile shipments. And experts say the outlook for Korea's exports will remain low for some time, with no immediate sign of global demand picking up.
Given the circumstances, local exporters will have to improve the quality of their products, whether it be with lighter chips or diversified cars with green technology to outpace Chinese competitors.
Shifting away from slowing China and towards countries like India, while stepping up exports on consumer goods is also key, as Korea is set to face long-term headwinds on the export front. Shin Se-min, Business Daily.
Now, the worst is not over yet for German automaker Volkswagen. Germany's transport minister revealed that Volkswagen's 98,000 patrol cars are among the 800,000 cars caught up in its emission scandal. With that, the probe is showing that the scandal is much bigger than thought, as it affects just not diesel, but also petrol engines. Following the announcement, Volkswagen shares plunged almost 10% in Germany, and things are not looking too good for VW here in Korea, as sales of its cars have dropped by over 70%. Korea Automobile Importers and Distributors Association said this Thursday that the number of Volkswagen cars newly registered last month was at 947 compared to the 2,900 in September. In less than 10 days, we'll be hearing the results on who takes home operational licenses for 4 duty-free stores here in the country. The race for 3 licenses in Seoul and 1 in Busan will come to an end after Korea Customs Service publicly announces the winner on November 14th, a Sunday. Now, there's a reason for this day being scheduled on a Sunday when the stock market is closed, so that information leaks that allegedly occurred in the previous bid for other licenses could be prevented. Retail giant Lotte Group and SK Networks will be defending their stores with permits set to expire at year-end, while Shinsegae and Tucson are in the competition to snatch up new licenses. Korea's household debt burden continues to mount on the back of record low interest rates and government deregulation. Latest figures show that it's on its way to surpass the $1 trillion mark. But not only is the sum climbing, the demographics of debt holders are shifting as well. Our Eunice Kim takes a closer look.
At a time when they should be enjoying the fruits of their lifelong labor, Koreans 60 years or older are racking up debt at twice the pace of their children's generation. First, the big picture. Koreans as a whole took out nearly 69% more money last year to put toward buying a property or a home compared to 8 years earlier. 60% more money was borrowed on credit. This ratio bloats when zoned in on people in their 60s and older. For mortgages, they borrowed nearly 130% more in 2014 than they had 8 years earlier, with $99 billion to their demographic. Loans based on credit also doubled to $81 billion. It wasn't much better for their counterparts in their 50s. Collectively, they held more in mortgages, $163 billion worth, representing a 116% growth from 2006, and nearly $130 billion in credit-based loans. While the economically active group of 30s and 40s saw relatively low debt growth, those just starting out, young adults in their 20s, weren't out of the woods. They borrowed 74% more money last year in the given period on credit, racking up nearly $22.6 billion, much of that bank-issued student loans. The details of how Korea's soaring household debt breaks down paints a disturbing social picture. More young people are starting their careers saddled with debt, and the older generation, facing a longer lifespan, are relying on loans to jumpstart a second startup career. Eunice Kim, Business Daily.
Third quarter earnings have been coming out, and we've been seeing both ends of the spectrum, with some companies surging ahead of expectations while others have plunged along with feeble demand in the global market. Take a look.
Many of Korea's top-listed companies fell short of market expectations that were already set low for the third quarter. Samsung Engineering saw an operating loss of 1.5 trillion won, or roughly $1.3 billion in the third quarter, while Hyundai Heavy Industries shed nearly $400 million due to delays in offshore projects and lackluster sales of construction equipment. Hyundai Steel was hit by the global slump as its Q3 net profit plunged nearly 80% from a year earlier. The country's largest steelmaker, POSCO, also recorded disappointing third-quarter results, faced with tough market conditions at home and abroad. But it wasn't all that bad for Samsung Electronics and SK Hynix. Samsung reported operating profits of $6.5 billion, marking its first profit gain in over a year, thanks to stronger performance from its semiconductor unit. SK Hynix also posted over $1.2 billion in operating profits on expanded sales, marking its seventh consecutive quarter in gains. But concerns are rising over fourth-quarter earnings now, as market tracker FN Guide expects earnings in the coming months to look even gloomier.
And to tell us more, Professor Kim Se-wan from Ewha Women's University joins us in the studio today. Welcome, Professor.
Good afternoon.
All right, so we saw companies like Samsung Electronics and SK Hynix posting an earnings surprise in the third quarter, perhaps reflecting a stronger than expected performance in the manufacturing sector. What's the reason behind this?
Well, overall, Korean manufacturing companies has been positively affected by depreciated Korean won against the US dollars. So in the third quarter only, Korean won has been depreciated over 3%, which gave a big help to exporting companies. And for the case of the Samsung Electronics and SK Hynix, surprising profit and sales mostly came from a very strong demand for memory chip demands in global market. So for the case of these two companies, chip division's profit has been increased over 70%, which is surprising.
Wow, and we've also been seeing better than expected results from major construction companies, right?
Right, but major construction companies has been suffering from very slow business in foreign countries for the last 10 years, actually, particularly in Middle East countries and South Asian countries. But they made a kind of big loss in these markets. However, they were pretty successful in selling new apartment in domestic market. So domestic markets business saved the losses from foreign business. But we need to pay attention for apartment market because the new apartment supply of this year is twice larger than that of the average years, which is 490,000 units of the apartment. So we have to pay attention to apartment market in the next year.
All right, but these companies that posted earnings surprise are actually taking a rather cautious, I guess, attitude even after posting an earnings surprise. Why so?
Well, I think they simply know the reason why they have been successful in third quarter. The surprising profit increase and sales came from mostly outside factors, not by their inside factors of improving competitiveness and business cycle changes from recession to the boom. So that's why they maintain still negative views on Korean economy.
All right, going back to Samsung Electronics, after it announced its Q3 earnings, it actually said it will go forward with a $10 billion share buyback plan. How did this come about, and how is this expected to impact the entire, I guess it's next for Q4 earnings as well?
Well, Samsung has been accumulating huge amount of the cash, not by paying out dividends to shareholders. So they accumulated almost $70 billion or 77 trillion Korean won. But the fact that they decide to pay out more they decide to buy back their stock means that theoretically same as paying more dividends, because by decreasing the size of the number of stocks in the market, that increases price of the stock.
Well, Samsung is not alone in doing that. Are there other companies going forward with this plan?
Well, I think that new movements is very significant step forward the shareholder-friendly policies of the Korean companies. Korean companies are kind of well known to foreign investors for being stingy in dividend payments. For example, the Korean companies' average dividend payout ratio, which means that how much they pay out their net profits through dividends, is 17%, which is the lowest between any country in the world. So for the case of the United States, it is 40%. For Australia, it is 70%. So that means the fact that they decide to pay more dividends means that it is a very significant movement to the future.
All right. Well, we've also been hearing that major companies like Samsung and LG Group are planning to kind of shake up their top brass.
Right.
How did this come about, and how is this expected to, I guess, impact the Q4 earnings?
Well, I was told that thanks to the great Q3's profits and revenues, they almost decide to carry out the changes of the executive members earlier than scheduled timetable. But finally, I think they decide to do it at the regular basis, which means that at the end of the year or at the beginning of the next year. So new executive members of these companies will more focus on more aggressive marketings in China and United States.
Okay, so moving on to fourth quarter outlook, earnings outlook, it's gloomier than the third quarter. So what's your outlook on that?
Well, I wish I know how the real economy turns out in the future. But the market's consensus is pretty negative. So they expect that the next year's economy is not much better than this year. So, and in addition to that, next year's the demand for chip memories will be decreased significantly because the price of the chip memory has been decreased over 10% last month. So we have to take a good look to the turnouts of the next year's economy.
All right. Thank you so much for your insight today, Professor.
Thank you very much.
And that does it for today. Thanks so much for watching, and don't forget to tune back tomorrow at the same time, same place for your Business Daily. Until then, goodbye.